Well, I think equity markets in general have been obviously very firm across the board. Some markets are pricing to perfection, leaving very little space for increased volatility for any changes. I think the Japan market could be one of those, but other markets are priced closer to perfection, like India, like some of the sectors within the US, and there I think there is potential for profit taking and rotation trades, albeit we still prefer equity. In the Japanese market, I think this will create short-term headwinds, but still prefer the overall space compared to other large regions.
As we wind down the year, we are heading into November next week. In terms of your investment strategy, which sectors are you focused in on now?
Well, I think we need a position for persistent inflation. So for us, that would be sectors and companies that can pass through pricing, so pricing power. We also believe that companies with exposure to commodities that can benefit from the stronger commodities will do well within the sectors, within the regions. I think they are very diversified. If we bring it back to Asia, we feel that India has done phenomenally well. India at 22 times PE compared to the rest of Asia at around 14 of it. I think it's, again, price perfection. The run up, the business surge has been is very, very strong in India, and there's very little room for any correction, any slowdown, any negative surprise. So we think Indian equities are probably looking a little bit stretched, and on the back of that, you've got places like both China and Indonesia, which are showing signs of progress, and large underweights in China are likely slowly to be filled. As you highlighted earlier on, the tech space has seen a little bit less negative headwinds. You're seeing less headwinds on policy changes, on debt crisis, and I think these are slowly moving towards a rotation play within Asia. And as we know, Asian valuations are still in lag in that of developed markets and other regions.